But welcome to today's Sifted Talks in partnership with the UK Department for Business and Trade. I'm joined by Alex Depledge, the Entrepreneurship Advisor to the Chancellor at the Exchequer at Treasury, the serial founder behind Khosla and Rishi. Iana Dimitrova, the Chief Executive at OpenPayd, a money management platform for businesses. Rishi Khosla, the co-founder and CEO at OakNorth, which provides credit and banking services to entrepreneurs. And Eileen Burbidge, the founding partner at Passion Capital and NFT Ventures, who's been on the board of heaps of UK startups, has been in this industry and has heaps of experience across everything in the UK. So throughout the conversation, we're not going to have a standalone Q&A section, but you will be able to submit questions using the Q&A function on your screen. And as you do so, you can vote up or down your favorite questions, and I will pick the best to ask our panelists as and when they come up. So yeah, there won't be a standalone Q&A section. Please do ask questions as we're chatting. So I want to start the talk today, which is going to go into everything UK tech, why you should invest in UK tech, why it's a great place for entrepreneurs to start their businesses and scale their businesses, with a bit of scene setting, because the people I have on my panel have been in this ecosystem for a long time and have seen it change a lot in the last 10 or more years. So I want to start with you, Alex. How would you sum up the last sort of 10 years of development in the UK tech ecosystem?
Of course, I lost my mouse to turn off my mute. Thanks for the question. I think that I actually feel really old because I've been in the ecosystem for over 15 years, which feels like a long time. And I think that the way that I'd probably describe it is that when I first started back in, like 2010, it was 2 years after the Great Recession. It wasn't a particularly good time to be starting a business. You know, we got into it like before Silicon Roundabout got its name, when Google Campus had just opened, when Passion was like 1 or 2 years old, Eileen, something like that. And it really wasn't a good time. Like, people were struggling, businesses were struggling, but it didn't feel like that in kind of startup. It felt like we were on the cusp of something great. Like, more and more people were moving here, more and more people were leaving corporates to become entrepreneurs. And from there, you've just seen that startup ecosystem go from strength to strength. You know, we've got the top 2 universities in Europe for R&D. We've got deep rivers of like startup capital, venture capital, third largest in the world. And to start this on an optimistic note, because there's a lot of doom mongering in our sector, I feel like we're in exactly the same place as we were in 2010, as we in 2026, 16 years later, where we're on the cusp of real scale-up success. You've had Revolut, Synthesia, Quantexa, all of these kind of fintech, deep tech, AI companies really starting to come through strong. The capital's not quite there yet, but it's coming there. It will come from the pensions, I promise. And it doesn't feel like a very great time to be alive in the UK, but I do think that like we are on the cusp of a bit of a scale up phenomenon, which is, I think, why I'm more optimistic than the average person. And so I think that's broadly my take on where we are and where we've come from.
Eileen, you must have seen that in the in your deal flow, in investment opportunities as well. Like, help us understand how that's changed and how your optimism has gone up and down over the years.
Yeah, I mean, I think we're probably quite a self-selecting group and we're all going to be optimists. So thanks for having me on this with everybody else. But absolutely, I think, as Alex was saying, I think the biggest difference between where we are now and where we were certainly when Passion first started in 2011, or as long as I've been here since I was at Skype, which is more than 20 years ago, you have people who have been through the ecosystem and have passed on their wisdom, their learnings, and their experiences. And we have not only a fantastic pool of entrepreneurs, we have repeat entrepreneurs, and we have entrepreneurs who are starting out for the first time, but who learned from the best when they were building up the sort of first or second generation. I think we're on sort of a third, fourth generation of phenomenal tech talent now, and that's what really makes a difference in the deal flow.
I want to turn to our entrepreneurs as well, to get their sense. Rishi, help us understand like why the UK? Why start out here? Why scale here? Help us understand why that's a great decision for any founder today.
So I say this based on the fact that we've been based here and this is the second business that we've co-founded, my business partner, myself, and scaled, and obviously OakNorth, very much a UK business, obviously expanding to the US. But if you look at the UK, the reasons why we continue to be excited by the UK, why we continue to see also amazing entrepreneurs start businesses here, is fundamentally because you've got such an interesting mix of, at least when you talk about fintech, the financial services industry, the regulator, and capital availability, and very strong university level talent, all in incredible proximity to each other. And that's quite unusual. You have a regulator who's very forward leaning, and therefore very supportive of innovation and growth companies. I mean, the fact that the PRA now has a scale up unit, which was something we had talked to them about, the fact that they had actually worked really well to create this sort of startup unit back 10, 12 years ago, but actually now for the companies which started then and have scaled, including OakNorth, it's sort of that scale up support is also incredibly important to make sure we've got the right focus. And regulation matters a lot when you're playing in the financial services industry, right? So incredibly beneficial. And then going back to the capital point, I think just in terms of you look at the type of capital that Eileen's used to providing in terms of sort of venture capital. You look at the type of capital OakNorth's used to providing in terms of debt financing, obviously for a different stage of business and a different sort of point in life. But those are just examples of the incredibly deep availability of capital. I know, Alex, we talk about this as well in terms of, is there enough capital availability or not? I truly believe the UK has an incredible amount of capital availability in terms of institutions which are based here, especially when you compare it across with the rest of Europe. So those are some of the reasons.
I will come to the capital sources soon. I wanted to pick up on something, Alex, you said. It feels like we're on the cusp of something great here. And I want to tie that to something that, Rishi, you spoke to our news editor, Martin, about in, I think it was September, maybe last year, where entrepreneurs have to hide their success in the UK. That feels like something that holds us back from being on the cusp of this great thing, right? Can you go into that a little bit for us?
You're asking me in terms of entrepreneurs holding themselves back. I don't actually think that's the case, but I might have misinterpreted the question, and I don't know.
Well, I think if I pick up just quickly, because obviously I made the comment back in September. I mean, I truly believe when you're a successful entrepreneur here, entrepreneurs don't get celebrated, and therefore, if there has been wealth creation, that wealth creation isn't something which, as I say, just it gets the admiration of people in terms of someone took a risk, they innovated, they work 24/7 or 996 or 997, and they achieved. And therefore, that's great. That's phenomenal. And you know what? That person should be an inspiration to many other people to think about doing the same. I don't think, and I, as I would have said to your colleague, Tom, I actually put a lot of it down to the British media. I think the British media is like very good at bashing and sort of saying, oh my God, look at this guy. He's made this much money, or he's going to get paid this much, or he's sold his company, or he's taking a dividend out, or or a guy or girl. And that's just like really negative, because actually what we should be saying is this is tremendous. Like, person innovated, succeeded, and should be an inspiration to show so many other people that it's possible.
I feel seen. Iana, again, before we get to capital sources, I think it's important to come to your story in OpenPayd, because you're bootstrapped, right? You've done this whole thing without taking any VC capital.
Yeah, Tom, first of all, absolute pleasure to join the esteemed panel here today. And hopefully our story and some of what we share here is going to be of help, and the information we share will help your audience and those that aspire to build a business here in the UK. I think the OpenPayd story is really an illustration of why the UK can be a great place and is a great place to start a business. So let me perhaps take you a few years back. So the business was founded 7 or 8 years ago now. And I think we've been incredibly fortunate in that we've benefited from all of the good things that Rishi listed, starting with a very progressive and engaged regulator, deep pools of talent, and obviously I'll come to the point of capital. If we go back to the start of the journey, so that's late 2016, early 2017, what our founder did at the time was he, first of all, successfully applied and managed to obtain 2 payments licenses, 2 UK e-money licenses, which in today's environment, anywhere across the world would take you significantly longer and would take you a lot more capital and a much bigger team to get to that license in the first place. So in the beginning, it was really that pragmatic approach to fintech, to payments that the FCA had at the time that actually allowed our founder to start the business with very limited capital. Now, from there, what we did was you turn to the team and you look at the expertise and the network and the access that we were able to get at the time. And that is absolutely unraveled. So I guess what I'm trying to say is that with very limited resources, we were able to, first of all, obtain the relevant financial services licenses, build the foundation of the technology, and from there really start scaling the business on a cross-border basis. Because the way to think about OpenPayd is we're actually today processing over 250 billion of payments on an annualized basis. And we've managed to do that out of the UK being the hub for that global export of financial services. And we very much maintain that the UK remains a great place to continue to innovate. And we see that with all of the initiatives now coming from the FCA and government equally across stable coins and the blockchain, and all of the use cases across payments and treasury management, leveraging that new technology, as well as the capabilities coming out of AI and machine learning. So I guess what I'm trying to say is, looking almost 10 years back, great environment at the time to start up a business, to bootstrap and to scale. I think the question now is, what do we need in terms of environment to actually retain those businesses like OpenPayd here in the UK from a capital perspective, so that we can get to the next level of maturity? What do you need? I mean, the reality is at this point in time, we need capital. So we have taken a slightly different approach than most of our competitors. In other words, we decided very early on to take calculated risks because we wanted to retain our independence. We wanted to retain the agility to continue to build and to have the freedom to pivot, to test and try and fail and then go again. So this is why we took some calculated risks in the beginning. We drove the business to profitability fairly early on, and then continued to iterate from there onwards. But we've now reached a stage whereby to get the business to that position of global dominance in terms of movement of funds and treasury management, we actually need to accelerate and move faster than our competition. And this is where we need a capital injection that's north of 100 million. And that size of check is not necessarily one that you find here in the UK. I mean, looking at my own inbox and my own network, most of the majority of the inbound interest is coming from the US, and that's across both public and private options to access capital. Alex, you promised that capital is coming.
Yeah, I just smiled when Iana said 100 million, because I was like, oh, here we go again. I'm gonna have to field the question of how are we going to do this? So I think it's not going to appear overnight, but Rishi talked about capital availability, and he's absolutely right. In comparison to Europe, we have a massive pool, hundreds of billions of pounds sitting there, that a lot of France and Spain don't have, and it's in our pension funds. And since the 1990s, since some of the rule changes and since dividend tax credit was taken away, we've seen UK pension funds go from holding 60% of their money in UK assets down to 6%. the percentages changed according to who you talk to, but it's roughly like a 10x decrease, if you like. And it explains the entire productivity conundrum that we find ourselves in. So we've had very little growth for decades now, and that's been driven by productivity, which is driven by investment. So the investment climate in the UK has been non-existent, and it's because our own source of capital has been largely absent. And if I said to you, and so the pushback I get all the time, and I have to kind of put a health warning around what I say, because I am not the government. I am not political. I'm not a member of the Labour Party. I'm not a minister. I'm just an advisor that tells Rachel what she thinks, and Rachel can choose to listen to me or she can choose to disregard it. So what I say now is Alex Depledge's view, not the Treasury view, not the House view, not the Chancellor view. If I said to you, we're going to give tax breaks for you to deploy taxpayers' money into companies, and we don't care where those companies are, I think that a lot of taxpayers would be like, hang on a minute, why might we be funding companies in Nigeria or companies in the US or companies in Lithuania? I think people think it's fairly reasonable to say, if we're going to deploy taxpayers' money into companies through a VCT scheme or through EIS, we mandate that topco, the company, is a UK headquartered based company. We do that all the time, hard mandation. But for some reason, we give blanket tax breaks on pension money, and we don't think that there's some sort of travesty being committed when most of that money leaves UK shores and is invested in the US. Now, you can argue the returns are better. Absolutely, they are. But we are starving our FTSE, our AIM, and our private markets of capital, which means we're not getting growth, which means wages are not going up, which means tax receipts come down, which means public services are starved. And then we ask the question, why are we in a country like this that's so challenged on a systemic level? And it's that reason. So I don't think it is a ridiculous notion to tell our pension funds that they must start investing in UK equities, and they must start putting money into not just infrastructure and housing and private capital, but also into venture, because we've seen the outsized returns that the Canadian pension funds get, that the Australian pension funds get. And we are missing out on that. Our pensioners are missing out on that. But for some reason, there's a debate about this, and it absolutely baffles me. So when Iana gets her 100 million, it's going to come from those pension funds backing bigger and better venture capital funds, or fund of funds, or going directly in. That's how we solve the problem in the UK. That's the growth story that everyone needs to hear. And I agree with what Rishi says about the UK media. That apparently is too nuanced or difficult a conversation for us to actually have about the way growth will work in this country and how wages will rise. And it's all tied up in this sector, this high-tech innovation sector that we still refer to as SMEs. And it kills me, because that's not what's going on here. It's a totally separate part of the economy that needs totally different policies and looking after, just the way that you wouldn't put McLaren tyres on a Ford Fiesta.
Eileen, from your position as an investor, how would that increased flow of capital transform the market?
Yeah, so obviously I don't disagree with anything that Alex said, and it's always hard to follow her because I feel like she's always got a mic drop and we should just leave it there. But I would add to some of the points she made, or I'd also look at it from a different lens. So frankly, as an early stage investor, I don't actually care if the follow-on money comes from UK sources or abroad. I great if we're attracting more US investors, and if Iana's inbox is filled with US investors. I think that's fantastic. So I think attracting foreign direct investment is fantastic. And to that point, in Q1, there was nearly $8 billion invested in UK tech across all of the venture classes and across all of the stages. And actually, there were quite a number of what, I don't know, you want to call them mega rounds, right? More than 75 million pounds or more in rounds. So it's going into early stage, it's going into the growth stage, and it's going into late stage as well. And the UK is attracting more investment dollars for this sector than France, Germany, Netherlands, all combined, like Alex was saying. So I actually think there is a lot of capital. I don't care if it comes from UK pension funds, of which I agree with Alex, we should unlock more of, and there's more there for the taking. But I think it's also fantastic if we're attracting that from other countries or other sources as well. It's actually validating the fact that what we've got here in the UK, both from a talent point of view, value accretion point of view, and for eventual returns, is attractive to people outside of the UK. So it does speak to Alex's point that UK then investors and sources of money should be tapping into the same thing. But as far as supporting the ecosystem and getting scale-ups like Iana's and other companies funded, I don't think there's a lack of it. And I think it's just growing and growing. It's 60% more than it was a year ago. In this quarter. So I think it's actually, I'm taking the optimistic view now, taking that hat from Alex for this part.
Alex, when the changes you talk about, when will that start to flow into the market? If I'm a scale-up founder in the UK, when will I start to feel the impact of that?
Just before I do that, Tom, I totally agree with what Eileen's saying. I just want to make absolutely crystal, like when you start cherry picking quotes to put in an article, I come across well because I don't often. It is phenomenal that we get so much capital. Like we're the third largest hub after China and the US, and that I definitely am not saying we should be doing domestic instead of foreign. In fact, we need both. But at the minute, we don't have enough UK, and that's what I want to see because really, one of the things that concerns me is about 50% of venture-backed companies in the last 10 years have walked out of this country, and with it goes the talent, the tax receipts, and the exit proceeds. And actually, we need that in this country, and that's why I care so deeply about it. So, to answer your direct question, like when will we see it? So, I don't think we're going to see it at the rate that I want to see it at because we haven't quite figured out how we're going to unlock that pension capital, and that is one of the things that I'm intently focused on. In the Treasury, much to the chagrin of a lot of people. But I think some of the things that we did in the last budget are helpful. So I managed to convince the British Business Bank to agree to mint Cornerstone, so be the first money into 10 growth funds. When I say growth, I mean funds that are able to deploy, £20 million tickets and above. And I already know 3 of those are nearly out of the door. And the budget, only was in November. So I feel like that is good because if we get 10 in the next 3 years, it will double the number of growth funds in the UK. So I think that's a really good start. And then there is work going on the pension funds. And then we also increased VCT limits. So older, more mature companies, because this is a weird factor. I mean, I think it points a little bit to the fact we've got a few zombie companies in this country, but the average age of a scale-up is 15 years old in the UK, and our EMI and VCT and EIS limits were 10 years. And so we needed to increase them, and we needed to bring the amounts in line with that. So that's what we did in the last budget. There's a whole bunch of other stuff that I'm working on in this budget. And then I think finally, the one thing, and I don't want to open Pandora's box using the P word, but procurement, one of the things that I hear over and over again when I talk to companies is that, this government procures something like 400 billion pounds worth of stuff. And in tech, 95% of that comes from American primes. And if you look at someone like, I don't know, Ateo, which is a phenomenal UK success story in AI CRM, like, why couldn't it be them? So I think we need to use the levers that we have to not just put money into companies, but get companies contracts, because I know most founders would rather take revenue in than give away equity. And so we need to get that procurement, both private and public, working more effectively, because we're actually quite bad at it in this country.
Rishi, you see the market from a slightly different perspective too, in that you provide entrepreneurs with debt funding, right? Like, help us understand. I want to help entrepreneurs on the call understand how they can tap debt funding, why they should tap debt funding, when they should tap debt funding. Like, help us understand how the dynamics of that work.
Yeah, absolutely. So I'll just go through a few examples. So obviously, equity funding makes absolute sense when you've got an early stage business and where fundamentally you've got negative cash flow, right? As soon as you turn the corner and you get positive cash flow, you've proven that the business has product market fit. You've proven that the business model actually works, and therefore there's a business model which actually creates earnings. At that point, you can obviously choose to effectively use your retained earnings to fund your future growth. You can continue to raise equity to be able to step up in growth, or you can start looking at debt. And obviously, debt has the massive advantage on one side of not being dilutive in terms of equity. The other side, it's debt. It sort of comes at the top of the capital stack. Now, Eileen and Alex will tell you that obviously a lot of equity comes at the top of the capital stack as well, with preferreds, right? With liquidation preferences, etc. So I would say that debt sort of has a massive advantage for the right business. I would also say if you actually zoom out and you look at the private equity industry, which is obviously a massive sort of investor in companies, including in the UK, obviously growth companies and lower growth companies, and obviously consolidations, roll-up plays, etc. But you look at the private equity playbook, it is buy a business, lever it up to buy it, and then use leverage to expand it, right? And at least the entrepreneurs who've had SaaS businesses and the like that I've known, who've sold businesses to some of the large private equity firms, have typically come back and said if they knew the toolkit which was available to them, i.e., to be able to use debt in the way that private equity does, that they would have actually preferred to probably not use as much debt as the private equity firm used, but use much more than they had to actually scale the business themselves and get to a much larger scale as an independent business before actually selling out. So I think there's a massive opportunity in terms of just educating the entrepreneurial world in terms of actually how they can use debt effectively, again, for businesses which are cash flow positive, right? So I think there's a really good opportunity there.
Iana, how do you think about that? Looking forward to this capital raise that you are targeting.
Yeah.
How do you
I mean,
think
if you don't mind, Tom, before I answer that question, I'd go back to just a couple of points that Rishi made, which are incredibly important. The last one being, he said, for businesses that are cash flow positive. And Rishi, I find this particularly interesting because I recall sitting in meetings with investors about 3.5 years ago at the peak of capital distribution, when actually our business being cash flow positive at the time, being profitable at the time, was a drawback, was a disadvantage. So I was actually sitting with investors and they were looking at what we were doing and they were like, oh, but you've built all of this, but you're also making money. We don't like that. And of course, the story changed quite quickly. I mean, 12 months later. And the one thing I would say loud and clear to anyone that's on the line is do not steer away from the fundamentals, as in make sure that there is a product market fit, make sure that you have a clear path to profitability, whether it takes 3 months or 18 months, depending on where you are in terms of your own runway. But you have to make sure that the fundamentals of your business are there despite the cycle that the market is in, because I think a lot of people at the time got burned because it was growth at all cost. We don't really care about profitability. We don't care about the fundamentals. And this is, again, how a lot of people, I think, lost a lot of equity, lost their businesses. The second point Rishi made, which is excellent, and I think we have as a business suffered because of that, is entrepreneurs are typically subject matter experts, as in we are in the business of building payments infrastructure, and this is what we know, this is what we understand. We're not investment bankers, we're not financiers, and therefore having a good understanding and having access to a toolkit and a network that can give you the right advice in terms of the financing options that are available for the stage of business that you're at is incredibly important. So I think more education, more materials, more access to networks, and even conversations like the one today is incredibly important for entrepreneurs, because most of the time we're head down 24/7 building a business in the weeds, and we also do not necessarily have the ability to hire a corporate development team to help us make some of these decisions. And then, Tom, finally going back to your question, how do we go about these decisions? I think first of all, it's a matter of timing, and then it's a matter of bringing the right partner around the table. Because for anyone that's built and scaled a business, they would understand very well this is your baby, and ultimately it's about taking capital, but it's about taking the right capital, making sure that there is an alignment with the people that invest in your business about the long-term direction, about the timelines, about the mission and the end goal when it comes to the continuous development development of that business. So for us, we still haven't answered that question, Tom. We're still very much thinking about it. We do recognize that we're at a point in the journey where we have to go for that dilution, where we need to strengthen the cap table, where we need that institutional credibility, if you will. But this is definitely not an easy decision to make, because we've been building the business over several years, and we're very clear about the mission. We're very clear about what we want to achieve through the infrastructure. We're very clear that we want to drive economic growth, and finding the right partner in terms of both ticket size but also alignment on the vision is not necessarily a straightforward answer. I will come back to you then when we do answer that question.
I want to pull in an audience question, which I think is important to address, which is it possible for businesses to only scale within the UK and the EU, or is it essential for them to explore the US? And I think there's sometimes a narrative that if the more and more you're pulled to the US market, the more likely it is that we're going to lose you here from the UK. But I don't think that's necessarily always true. Rishi, you're a UK company. You're in the US a lot. Iana, you said similar, you're a UK company, but the next step for you is to expand into the US. Rishi, I'll start with you first on that question, and Iana, I'll get your perspective as well.
So look, obviously the US is the largest single market. Again, it's not a single market, but it's more of a single market than Europe is, right? I mean, each state does operate differently, and you've got cultural aspects, you've obviously got regulation aspects, etc. But if you're going to do the US properly, it is a solid investment. I think that obviously when you're in the UK and you're expanding across Europe, each country has scale, but it doesn't have the same scale clearly individually as the US. So given that, I think that all else being equal, if you've got a business which is growing from the UK to Europe, you're less likely to lose it than you are if you go to business in the UK scaling the US. All else being equal, I would say from our own particular perspective, the UK still has incredible talent, and we have an incredible business here and support incredible entrepreneurs. So for us, the UK is absolutely a core market, but we can see the US becoming a larger part of our business than the UK, right? Just from a pure scaling perspective. But we still centralize a lot of things here in the UK, right? It's all else being equal, London's a lot cheaper than New York, right? So sort of doing things in London makes way more sense than doing certain things in New York. The UK will continue to be very important for us.
Iana, I want to say.
Tom, I would echo what Rishi is saying. We process today over 250 billion in payments, and we do that out of the UK. I want to make that loud and clear. We service customers globally out of our UK headquarters and our infrastructure that's here. Ultimately, being a payments infrastructure business, we need to follow the growth journey of our customers. And as a result of that, we have to be in the US. We have to build rails for US payment processing. We have to build infrastructure that offers a global service. So from that standpoint, we are, yes, investing in US licenses. We are investing in infrastructure, replicating the platform, having all the certifications, building out a team. But this is very much mandated by the growth journey of our own customers. And by the way, let me make that very clear. It's not just about the US. Our customers are very much looking at the Middle East as well as the Far East. So we're actually investing in different directions to follow that growth journey. So I guess for us, the move into the US is simply driven by the demand coming from our own customer base. But do we see ourselves still today as a UK company? Yes, absolutely. Do we believe that we can export quality financial services out of the UK? Yes, 100%, and we continuously do that.
Eileen, I want to ask you that question as well from a portfolio company perspective, right? You must how do you How do you think about that? It's a
Yeah.
no-brainer.
I mean, I think first, as you say, it's not binary. And I think there are lots of routes to success. And I think a lot of this is such there's so many factors. So it depends on the market. It depends on the audience, depends on the type of business. But to oversimplify the question, which I'm sure the person wasn't meaning to do, no, is going to the US absolutely critical for scaling? Absolutely not. And for over 20 years, I think I've, benefited from experiences of that. I've mentioned I've been here and originally started by being the first product person at Skype. Skype never had a single bit of presence in the US. The founders were actually famously or infamously known for, not being able to travel to the US because of subpoenas that were open against them. Even Monzo, which Passion obviously has, very flatteringly a lot of credit for supporting. Monzo has built up a fantastic business really deep in the UK. And I don't think anyone would argue that it's beyond a scale up at this point. But I think there are countless examples. You can look across Europe for European successes that haven't had to look to or explore the US. It can also, if it's a direct to consumer business, really very well market to consumers in the US without needing to not be a European or a UK business. And I think there's the opportunity to address the whole world from the UK. I think, Iana was saying it when she was talking about her business and handling payments. We do have this benefit of a time zone that overlaps with more regions around the world than anywhere else. So we can have within the same business day conversations with colleagues, with customers, with partners that are in North America as well as in Asia. And that really benefits, I think, companies that are scaling from here.
So we've talked a lot about what we need from a domestic capital point of view to help scale ups here. I have a question in the audience, which is the UK government doing enough to attract FDI into the UK and attract scale-ups from the US, from Europe to our shores? Alex, do you want to take that one?
So I feel like I've been way too positive, so I might just change it up a bit. I think that, I think for me to sit here and say that we've got everything right is just patently not true, right? We've had a very chaotic 14 years of changing prime ministers and 11 education ministers, and we have had Brexit and COVID and God knows what. Like, we're not in a great place. Like, let's not, I'm not trying to say that we are, but I don't think we're in as bad a place as everybody makes it out. And I think that's evidenced in the fact that we've had lots of very ambitious and interesting kind of opportunities come to our door from numerous countries around the world. There's a lot of FDI flowing in here. I know of like 6 or 7 companies just the other day I got told are getting prepared to list here in 27. You've got I went to the stock exchange opening by a network called Endeavour, and they showcase like 10 or 12 founders from all over the world that had chosen London, a little bit like Iana's story about how they had not a lot of money and were able to get a license and start trading. One of the founders, Lemfi, stood up and talked about how he transferred 60% of his net worth to some guy he met on the internet that said it could get him a banking license. And a month later was trading, and now they're doing tens of millions. It's a Nigerian company that's chosen to trade in London. And then there was a guy, I forget the name of the company, from Bulgaria, and it's Bulgaria's first and only unicorn, right? So let's not kid ourselves about how attractive the UK is. Like, we've got a great legal system when the courts are not so full. We've got a universal language. We're in the center of the universe. We've had all the trade and maritime flows through us. So it's like we have some strategic advantages. And I think we need to stop getting hung up on trying to be America. Like, no one's going to be America, but some people might not even want to be. I don't think we're trying to rival them. I think we're just trying to punch above our weight. And at the minute we're underweight and we need to get overweight. And I think that looks, for me, like taking fewer, larger bets on the things that we do well. So we do creative industries very well. We do financial services very well. We do life sciences and biotech very well. AI is an umbrella technology, but there are parts of that stack, not data centers, not LLMs, where chips, photonics, quant, compute, where we can play and lead and be part of that global supply chain. And that's what's really important. And I think really what we're actually talking about is this like underlying anxiety that we have in the UK about what is our place in the world and how do we play to the best of our abilities. And I think all the raw ingredients are there. We just need to kind of get our act together to sort of move forward on it, because like all is not lost, and we're actually quite good at quite a lot of things, and because of that you see great inflows of capital, because let's be really honest, we're cheap, as Eileen's already like alluded to. Like the depth of capital is better in London than almost anywhere else in the world outside of Silicon Valley, so there's lots going for it. And I think I just have to like overcompensate for the negativity by just very out of character, because I'm a very cheap northerner, be really positive, and it's not my natural demeanor, and it's freaking a lot of my friends and family out, so I may have to shelve it at some point.
And Tom, if I can add just one more thing,
Yeah,
because I think Alex made an excellent point there. She said, let's not try to compete with the US. Let's not try to be the US either. I'd like to just echo that point and go one step further and say, also, let's not try to be Singapore. Let's not try to be the Middle East. And the reason why I say that is because about 18 months ago, we were sitting on numerous panels, conferences, having different meetings with customers, with partners. And there was this exodus out of the UK to the Middle East. So both across the financial services payment space, as well as anything that had to do with digital assets and stable coins. Now, what we see, given the events from the past 8 weeks, 10 weeks now, is that the stability that we have in the UK, both from a political and regulatory standpoint, is incredibly important. So let's not underestimate the value that the FCA and government, despite all the changes that Alex referred to, are actually bringing, because this is incredibly important for any entrepreneur that is either starting or scaling up a business.
Alex, I wanna come to you as well on what Iana has picked up on, like the stability, the importance of stability. A lot of these changes to EMI, the launch of the sovereign AI unit, Mansion House reforms, stamp duty changes to make it more attractive to float here long term. These are like long-term bets that these changes will slowly make their way into the market, and it will become more attractive to stay, scale, and float here. I speak to a few investors who worry that, because obviously due to the potential short-term nature of the current administration, like elections come around, changes happen, cabinet reshuffles happen, they're worried that like that stability might be shaken a little bit, and some of these bets might not pay off because of that. How do you think about that? How do you think about ensuring that these changes that are coming in are long-term changes that are here to stay?
I think that I think politics is short-term, but the civil service is very long-term. So it's very hard to make change. But once that change gets into the machine, it actually takes quite a lot to derail it. And it's why, look, I incurred a lot of wrath in this role, because I've been very vocal about the sector of the economy that I define as entrepreneurship, right? And it is high growth, innovative companies. And that means I'm not focused on SMEs or mid-sized companies or family companies. And all of those can like overlap with the bit that I'm focused on. But, a lot of people say to me, oh, the economy's sexy, Alex. It's not just sexy. It's all these, this is the foundation we need, places to go and things to do. And I don't disagree with that. And they're completely right. And I'm certainly not trying to take a sledgehammer to it. What I am trying to say, though, is if we want to grow the economic pie, we need to take bets on the companies of the future. Because, Britain was built on the Industrial Revolution. We got rich on it, right? We had factories and mines, and that was that generation's wealth. What is the generational wealth that's coming down the track? And I don't think it's a lot of the existing industries that we see. And I know that might feel quite painful to some people, but that is the natural cycle of like economic evolution. And so I think the things that I have tried to do are very, very targeted interventions where I think we can pull the biggest lever. So in the last budget, it was really all about making sure that, I say write a love letter to scale-ups. It's like, why should you stay in the UK, and a lot, and for some people it will make total sense for them to go to the US, and they should go. Like, I'm not saying that they shouldn't, but there are some companies that it makes complete sense for them to stay here, and the only reason that they're leaving is they feel like they can't remunerate their employees well enough, or they can't find the capital that they need, or regulations getting in the way, and they're the sorts of things that we can do. So I was very targeted in the last budget. I'm going to be very targeted again in this budget around pensions and procurement, and I think that is why I have been so targeted, because it's really easy to come into a job like this and think everything is on fire and try and do lots of different things and then doing none of it well. And actually, because I concentrated, the stuff that I've done is in the machine. So even if somebody walks in the room tomorrow and says, you know, hi, I'm the new Chancellor, and wants to take a completely different approach, they'd have to start unpicking a lot of things. And so I think we should all be worried about short-term volatility. I don't think changing governments and ministers all the time is the way to get anything done long-term. But the good news is, like, because it's such a beast, once it gets into government machinery, it's actually quite hard to undo it. So there's some positives and negatives in all of that.
We've had a few questions come in on talent, which we haven't really actually got into much. So I'd like to spend 5-10 minutes or so talking about that. And it's around the sort of general talent pool in the UK, but also how you attract that talent. And I think something that a lot of entrepreneurs were happy about in the last budget was changes to employee share options to make it more lucrative for you to stay with the startups you're joining until they scale and exit, so that you obviously get a good return on that, and it makes it worth staying long term. Rishi, how do you leverage that as a founder CEO? How do you make it attractive and set up your options pool so that you are keeping people and keeping your best people so you can scale? How do you think about that?
So
in the UK.
Yes, I'm gonna say a few things on this. The first thing is, when we started the business, what we specifically did is offered to early team members the ability to actually invest in the company. And I would say that the ownership that created, the ownership culture that created in the business was incredibly strong. So up to the point that we were 250, 300 people, about 2/3 of them had invested the equivalent of 1 year's net salary in cash in the business. And actually having someone cut a check and put money in, as I said, creates incredible alignment, incredible loyalty, and they drive the business in a different way to if they just got options, because options are great and they're a phenomenal tool. But the thing with options is that it doesn't feel like real money because you haven't put the money in and you haven't got any money out yet. So I think option stuff really getting valued when people start seeing options get monetized, right? And at that point, your teams then say, okay, options have a lot of value, right? But there's obviously a massive time, well, not massive, but there's a whole chasm in between in terms of starting the business and getting to the point where you can actually start giving liquidity against options. And therefore we found it incredibly useful to have that structure up front where people had invested. The value of options is obviously, as I said, very strong. The tax complications of them are very unfortunate, right? And what clearly our objective is to align long-term behavior, and you'd sort of say that should get rewarded as some level of capital gains as well. So I think that I'm not going to make this negative, but I think there's more work that could be done there. There clearly are growth share schemes and things like that, which also do work. Obviously have the need for someone to actually purchase upfront, and again, if they haven't had liquidity, purchasing is obviously a challenge as well. But yeah, as I said, sort of massive proponent in terms of sharing equity value and creation, wealth creation with teams. I think one of the big questions, and it's interesting, even as a company, we sort of talk about this, is whether you take equity and you sprinkle it across all employees and your full team, or do you actually concentrate it within a smaller group of individuals within the business, and what drives, like, in a way, the right culture and the right outcomes in the business. But that's another topic which is always live for us.
Iana, I could see you nodding through.
Yeah, no, I'm nodding because this is an excellent question. For us, equity ownership is incredibly important. Given our history and our journey, I mean, actually the journey we embarked on was sharing and giving access to the equity to every single employee. And I firmly believe that this is one of the main drivers behind our success, because the alignment that this delivers across not just the senior management team, but every single member of the team, irrespective of tenure or level of seniority, is incredible. And I think it is an incredibly powerful tool, especially at the very early stages of the growth of the company. Of course, you can't continue with that indefinitely, but at the early stages of growth, that is incredibly powerful. And also what we do find is that when speaking now to investors, demonstrating that it's the entire team that is vested and is willing to roll up their equity is also something that investors are paying specific attention to. Yeah.
Can I think so? Ilana and Rishi just made really excellent points around why the EMI scheme was so important to get through at the last budget. And I don't know if anyone was aware, but we also had a call for evidence around, do we reward risk appropriately for entrepreneurs, and how are the schemes working more generally? And the team here have done an amazing job going out and consulting with hundreds of entrepreneurs and companies, and what's come back is exactly the stuff that Rishi is talking about: cliff edges, unworkable rules that outdate things, like right risk and reward. And so that's something that, just to reassure Rishi and Ilana, that's where we're actually looking at that quite closely. And it's actually amazing what can happen when entrepreneurs, what I'd call the front line, talk to government. And that's kind of why I think me in this role, or someone like me in this role, is so good, is that when you don't have somebody like me being like, why are you talking to those people? What you end up with is a series of lobby groups that all kind of try and represent bodies. And while that can be efficient, it doesn't bring to life some of the human stories behind the things that we talk about when it's tax or when it's regulation or where it's wherever. What's been really lovely in the call for evidence is the Treasury for the first time has interacted with hundreds of entrepreneurs and heard firsthand about CSOP schemes and EMI and things like that. And I think it's been a really big success. So now the tax team in the Treasury for the first time is like super invested in, like, oh, you know, do these schemes need modernizing? What are the questions we should be answering? And I think that's a real success of this sort of role.
Eileen, I'm keen to get your perspective on this as well. What does this sort of thing mean for portfolio companies? Like, why does it just make it all more attractive to be an employee at a startup in the UK?
I think it's just as Iana and Rishi were saying, as founders, when they can align their team members and make sure that everyone's invested in the success of the business, it obviously helps from a motivational point of view. It's an incentive scheme, right? So it says what it does on the tin, but it makes sure that you get maximum productivity alignment, and you just have the same drive across the whole business. And it is in no small part to Alex's work and what she did in terms of coalescing so many different people to give input in that call for evidence, and to drive the civil servants and the politicians to rally around making some changes and putting in really, really practical differences that were going to make a difference for people. I think people are drawn to working with fantastic founders like Iana and like Rishi. They want to build great businesses with people that they feel really inspired by, that they think are aspirational, and that they think are going to have significant impact on the world, right? That's ultimately what brings somebody to a company and to a business. But then to keep them aligned and to keep them really, really feeling like they have a vested interest with the founders is absolutely crucial. So continuing to improve the schemes that we have and continuing to listen to entrepreneurs, which is what Alex has been so successful at doing, is only going to serve us even better and better. And I think that I've always said that I don't think people are setting up businesses or joining businesses necessarily because of the policy and the regulation that's in place, but it absolutely helps to grease the skids. It does absolutely help to put things in place that'll make things even better, easier, and to reward appropriately where we'd want to see those outcomes.
So we have about 2-3 minutes left. I want to do a quick round the room. Iana, Eileen, and Rishi, if the next budget was happening tomorrow, and I'm sure you chat to Alex about this anyway, I want you to pitch her one thing you absolutely want to see in it for UK entrepreneurs. Rishi, can I start with you?
A version of a program to bring top entrepreneurs from outside of the UK to the UK to scale in the UK.
Eileen.
To extend Alex's role and remit so that she stays. I think it was limited to budget, so that's what I'd want. That's my first ask.
Iana.
Yes, echoing that, and also accelerate, move faster with regulation and other government initiatives around blockchain and stable coins, because we have to make sure that the UK remains a great place for innovation. And I think that's the future of financial services.
Alex, if you're pitching yourself.
Happy to say 2 out of 3 are in train. The one that isn't is me.
See, I knew it. That's the most important thing, Alex. But thank you for everything you've already done.
Oh, bless you. I mean, I honestly, guys, I've done that much. But it's very nice to hear. But I'm sure we can find a really good replacement for me. But yeah, I don't want to end up becoming like part of the furniture.
Alex, what would you pitch yourself?
Oh, pensions. Sorry, I sound so boring and no one gets it because they just don't like, it feels like really esoteric, I guess, but it's just, yeah, I think it's the biggest lever we have, aside from things around talent like employment and visas and things like Rishi was saying. I think we're onto a really good thing in the UK, and I do worry about that.
Amazing. Alex, Rishi, Eileen, Iana, I am going to wrap us up there. So thank you so much for your time, and thank you to our partner as well, the UK Department for Business and Trade, for their support. For more information on how the UK government can support your business, you can visit business.gov.uk. I think my colleague has dropped the link into the chat, and there's also a personalised guide to setting up in the UK and expanding your business. I think that link is also in the chat right now. And yeah, if you enjoyed this, you can catch the next Sifted Talks tomorrow, actually, at 12 p.m. UK. So check out the sifted.eu/talks website for more information on that. So yeah, Alex, Rishi, Eileen, Iana, thank you so much for your time. See you soon.
Thanks,
Thank you.
Tom.
Thank you for
everybody.
having me.
Bye.
Thank you.